Are you a restaurant owner trying to improve the efficiency of your staff by turning more tables and serving more customers? Is your food prep time not quick enough for impatient, hungry customers that want their food? Or maybe it's just simply time to finally upgrade your ranges, stoves, fryers, and refrigerators. I'm Darlene with Easy Equipment Finance, and today I'm going to talk about the different financing programs that are available for restaurant owners just like yourself. If you can relate to any of these questions, then this video is worth your time to watch. The two top financing programs that really seem to fit and suit a restaurant owner's needs is equipment financing loans and also unsecured revolving credit lines. Let's talk about an equipment financing loan. Well, first off, an equipment financing loan helps take the sting out of having to pay for a new range, oven, refrigerator, or even a robotic coffee maker. A lot of times that is a really expensive expense for any restaurant owner. By financing the equipment that you need, you can finance it over a longer period of time, usually 5 to 6 years max, which would be 60 to 72 months, and you have a manageable monthly payment. A definite benefit about an equipment financing loan is it brings down your tax liability at the end of the year. And basically what that means is it's a tax write-off, and that tax write-off goes against your gross income, which brings down your net income, and that's the income that you pay taxes on to the IRS and to the state if you're in a state that does charge state tax. The second great type of financing available for restaurant owners like yourself is an unsecured revolving line of credit. How a revolving line of credit works is a little bit different than an equipment financing loan. The lender will go ahead and approve you for a certain credit limit. Let's say they approve you for $250,000. You can draw upon that credit line up to the maximum amount, which would be $250,000. The terms that lenders will qualify you for as far as a payback goes can be anywhere from 12, 18 to even 24 months. But the great thing about it is, let's just say you need to borrow $20,000 against that credit line. All you'll be paying on is the $20,000 that you drew. And let's say you were approved for an 18-month term. That means you have 18 months to pay back that $20,000 that you took off the credit line. Now, if you pay that $20,000 back sooner than the 18 months, you end up saving money because your cost to borrow that money ends up being cheaper the sooner you pay it back. With an unsecured line of credit, the funds are deposited, or at least the draw that you're taking, let's say the $20,000, gets deposited directly into your account. That way you can turn around and spend it on anything you may need. Maybe it's to hire another employee, maybe it's to get additional restaurant supplies, maybe you need to do a food or wine order with one of your vendors. You can use it for whatever you need. The most important takeaway for this video for restaurant owners is that you have financing options and programs to choose from. If you're looking to upgrade your stove or replace a refrigerator, or maybe you do want to get that really cool robotic coffee maker, then doing a traditional equipment financing loan would be better suited for that, because it would not only give you a longer term, like 4 or 5, maybe 6 years, it also gives you a fixed expense that you know you can budget and is not going to go up. Now, an unsecured revolving line of credit is a great tool for you to also have in your toolbox, because it gives you another avenue to utilize cash instead of always dipping into your pocketbook to use your cash on hand. Let's say it's January or February and business is generally slow that time of year because it's after the holidays and people have spent all their money on holiday gifts and they're not spending a whole lot on going out or even takeout. Your expenses might be a little overwhelming, it might be a little stressful. By having an unsecured line of credit, that can help alleviate some of that stress because you can pull money out, do a draw from that line of credit to cover whatever expenses might be a little tight for that month until business starts picking up again. If you like this video, I ask, please give me a thumbs up or hit the subscribe button if you'd like to learn more about the ins and outs of equipment financing. I talk about all different types of industries and the ins and outs of the financing world. Or if you have a question, please feel free to hit the link below and contact us. We are always happy to help.